Grade 11's hi. Today we are doing the current account note. This is the note we prepare to measure the worth of each partner in the business. And this worth is determined by the capital contribution made by each partner in the business. Right on top there will be the names of two partners involved in this partnership. Followed by the two details will be your total column right at the end. We will have salaries earned by partners for the whole year. We combine the two and transfer to the total column. Here you don't write monthly salaries, but yearly salaries. So if you are given a monthly salary, you'll times that by 12 so that it amounts to the whole year. Interest on capital will be the second line item, which you add together, transfer to the total column. More details on interest on capital will follow in our next videos. You'll have a bonus there, transfer to the total column. Followed by salaries, interest on capital, and a bonus is what we call primary distribution. Primary distribution we get by adding salaries, interest on capital, and a bonus. You transfer two combined amounts to the total column. We will have final distribution. How do you get your final distribution? You first go to the total column, write the net profit you are given from the statement of comprehensive income, the old term being income statement, and then once you have that amount, you'll subtract from the total primary distribution and write it there. Once you have written your final distribution as your net profit minus total primary distribution, you'll allocate this according to the ratio given to each partner. Then partners during the year may decide to use resources from the business. And then those resources, because the business entity principle tells us that affairs of the business and the owners should be separate, we will show under drawings in brackets because they decrease your equity in the business. Once you have allocated net profit and also drawings in brackets, you'll have retained income. That's the amount you have left after subtracting drawings from your net profit. You'll have your retained income. This is the profit you don't touch because you want to preserve your equity in the business. In case something happens in the future, you know you have a safety net. You'll have your balance at the beginning. If your balance is on the debit side, the sign is minus. The sign is minus. But if it's on the credit side, you'll have a plus because it's favorable. Why? Because current account is an equity. Equities increase on the credit side. Then, to get your balance at the end, you'll simply say return income for the year, which you get, I told you, a net profit minus drawings, you get your return income, then return income plus or minus balance at the beginning is your balance at the end. And this balance at the end here, you take to the statement of financial position under equities because it's part of your equity. Then I just want to wrap this with this just one point I want to bring to your attention. This is the alternative format you can follow. With the first format, right below your final distribution is your net profit or loss. but here net profit or loss is on top. That's just the slight difference I wanted to draw to your attention. But really doesn't matter which format you follow as long as you know how to prepare the current account. And important here is to know your formats, because with the mastery thereof, accounting will become easier. So memorize these formats, and in the next video we are going to do an activity or a few activities to get your juices going. Bye bye, Grade 11s.